All right, let's get right into it. For a while now, there's been this huge debate swirling around MicroStrategy. I mean, is it still the software company it's always been, or has its wild Bitcoin strategy turned it into something, well, something else entirely? Well, guess what? A recent decision from a major stock index just gave us a massive clue.
And just look at how people are talking about this. On December 12th, Reuters came right out and called MicroStrategy a Bitcoin hoarding company. Now, that's not some stuffy official financial term, is it? It's deliberately blunt, and it just perfectly captures how the market sees them and what this whole debate is really about.
So how does the company react? With a formal press release trying to correct the record? Nope. Instead, you get this classic dry comeback from its founder, Michael Saylor. He doesn't even push back on the label. He just leans right into it. He's basically saying, yeah, and this is our strategy. The noise outside doesn't matter to us.
Which brings us right back to the core question we're trying to unpack here. What exactly is MicroStrategy today? For the longest time, the market's been scratching its head, but a really big, highly anticipated event just forced a moment of genuine clarity.
And that catalyst was the scheduled rebalancing of the Nasdaq 100. Now, this is a big deal. We're talking about one of the most important tech indexes in the world. Being in or out has huge implications. And because the Nasdaq runs on a strict set of rules, it had to make a definitive call on what MicroStrategy actually is, based on its framework, not on market chatter.
And the result? MicroStrategy is still in. But here's the crucial part. It's not just that they're in, it's why. The Nasdaq didn't bend the rules or create some special exception for them. Nope, they just applied their regular old criteria and MicroStrategy fit. No drama, no debate.
So to really get this, we've got to pop the hood and look at how the Nasdaq 100 actually works. Because this is where you see this fascinating split between the cold, hard rules of an index and the powerful story the market tells itself.
And this comparison just lays it out perfectly. The market narrative, the headlines, the gossip, it's all obsessed with what the company owns, which is that massive pile of Bitcoin. But the Nasdaq's framework, it couldn't care less about that. It's focused entirely on what the company does, its day-to-day business. They're basically asking two completely different questions.
Yeah, you got to think of the Nasdaq 100 as a robot. It just follows its programming. And rule number one is super clear. It only tracks companies that are not in the financial sector. So banks, investment firms, they're out. The robot's whole job is to figure out what a company does for a living. From that cold, mechanical perspective, MicroStrategy's Bitcoin is just how it manages its cash. It doesn't change the fact that its day job is still selling software.
This decision really marks an important turning point. The whole conversation around MicroStrategy is evolving. For the longest time, the questions were almost existential, right? Like, can this model even work? Is this sustainable? Now, the debate is shifting to something way more technical.
It's like we've officially moved from step 1 to step 2. The old questions about whether the whole thing would just collapse have kind of been put to rest. So now we're on to the new question. It's not about whether the model works anymore. It's about, okay, so where does this thing fit in the old filing cabinets of the financial world?
But hold on, not every question has been answered. While the Nasdaq decision is in the books, there's another major index provider, MSCI, that poses a completely different and, as of now, unresolved challenge. They look at the world through a totally different lens.
And just look at this comparison. It gets right to the heart of it. Unlike Nasdaq, which only cares about the business activity, MSCI's framework explicitly looks at what assets a company holds. For them, MicroStrategy's Bitcoin is front and center. So while Nasdaq asked, are they a financial firm? MSCI is asking a much more modern question. Do a company's assets fundamentally change what that company is? Their answer, which is coming in January, is going to be a huge signal for anyone else thinking of following this playbook.
So after all that, what's the big takeaway? Well, the Nasdaq decision has given us a massive amount of structural clarity. But, and this is a really important but, we should not confuse that clarity with market confidence. Those are two very different things.
And this really highlights the disconnect, doesn't it? On one hand, you've got structural clarity. The underlying foundation is getting stronger. The rules of a major index were applied and the company fit right in. But market confidence, that's still a total roller coaster, tied directly to the daily price of Bitcoin. It shows that while the financial plumbing is starting to accept this new model, the human emotional side of the market is still struggling to figure out a company that just doesn't fit into any of the old boxes.
Which leaves us with a really fascinating question for the future. MicroStrategy is a pioneer here, using a digital asset as its main treasury reserve. As more companies innovate and start to blur the lines between these traditional categories, something's got to give. So who's going to adapt first? Are the companies going to be forced back into the old boxes? Or will the rulebooks themselves have to be rewritten to accommodate them?